today for our business webinar on for strategic goal planning and business owners. My name is Kyle Brooks. I'm going to start us off today. I've been with the firm for 4 years now. I'll be covering a few housekeeping notes and introducing our firm and presenter today. As you all can see, your cameras have been turned off, plus you have been muted, just to reduce background noise and for your own privacy. Give you a little bit of information about us. We are a family of companies specializing in taxes, integrated business services, and financial clarity. We serve businesses, individuals, and nonprofits, and government entities. Our mission is to be a advice-first firm, prioritizing helping our clients reach their goals. I'm going to get into about our speaker, Mike Gascon. Mike has been with the firm Mike has been in the industry for 20 plus years, helping clients reach their financial goals. Mike is currently our marketing director, shareholder, and part of our executive team. I'm going to pass it on to Mike to start ahead.
Perfect. Thanks, Kyle, and thanks everyone for being here today. You may have seen me on some other webinars in the past. I lead a lot of these for the organization, and happy to be here today with all of you. We're going to talk about, I think, a pretty important topic in goal planning, and timely in the year. It's the time of year when most people tend to think about, reflect back on what went well in the previous year, what they'd like to change, maybe see different in the current year. So timing's good. I will let you know, we run our business on an operating platform called EOS. If you're not familiar with that, that stands for the Entrepreneurial Operating System. And a lot of the concepts that I'm going to talk about today are part of that structure. Now, I say that these concepts essentially are a culmination of best practices that were gathered from business owners like you, entrepreneurs across the country, and other business thought leaders. So nothing that's built into EOS is really unique. The operating system really just brings all of that together so you can run your business on it. And not suggesting anybody here has to use that platform. There's a multitude of other operating systems you can use for your business, but wanted to just give some context on how we think about things. So I'm going to talk about a handful of different things today. I'll go into core focus. Who are you and why are you here? Core values, which are important for your business, the things that embody the people in your business and your organization. Obviously, we're going to talk about goal planning. I mentioned that already, and we'll talk about the different types of goals that you can set for yourself and your business. Short, intermediate, long-term goals, the importance of the variety there. And then aligned with your goals, what are the specific key performance indicators, the indicators that give you the best pulse on your business on a frequent basis, scorecards that align with that. How do you track progress going forward? What's the right meeting cadence for your leadership team if you have one? If you have departments within your organization, what should that look like for them? And then once you've got this all packaged together, who do you partner with for ongoing proactive advice? Who helps hold you accountable to the things that ultimately you want to accomplish in the business that's going to be important going forward? We have a coach for our business that we've worked with for the last couple of years that helps us do that. It's important to have somebody that helps align you in those things. And then we'll talk about next steps. We'll have an opportunity for questions. There is a question bank in the bottom right-hand corner. You'll find throughout the presentation. If you do have questions, please put those there, and we'll have time at the end to answer those. I know sometimes everybody's business here is probably different, and you may have some specific questions that are better answered outside of the session today. send us an email after the session, and we'll make sure we connect with you and answer those. So with that, I'll jump in. I want to start with core focus. So again, who are you and why are you here? This is an example of what we have built for our company, but this should really tell the story to your employees and also to your clients that ultimately you serve, about who it is that you are again, and ultimately what you're trying to drive. What kind of impact are you trying to have on your local community or on the people that you're working with? So for us, we're a team of motivated, authentic professionals, care deeply for one another, our clients, and our surrounding communities. We work to continuously improve, both as individuals and as a firm, while fostering positivity in everything that we do. You're going to find that when I flip to the next slide and talk about our core values, that those are mentioned throughout that statement there. And then, why are we here? Again, what kind of an impact are we trying to have on the work that we do? Why are we here is to positively impact people and communities. That's our mission, ultimately what we're trying to drive. So I don't expect you to adopt our core focus, but it is important to think about this for yourself, and helps your clientele and again your employees come together and get a good understanding of what it is that you're trying to drive. Equally as important as your core values. Again, this is part of our EOS structure that we run on. These are the values that you should be hiring, firing, recognizing, and rewarding your employees on. So as you're trying to find new people for your organization, these should be talked about at a high level. You should make sure that the person that you're hiring is going to be a good fit. They embody these things. If you have people in your organization that are not embodying these things, you need to address them. So the way that we do that is we go through, it's a people analyzer exercise every year. We look at all of our employees and we give each employee a plus minus, or a minus in all of these values. A plus meaning they exude that value most of the time, say 80%, plus of the time. We all wish that we could have a positive attitude every single day, but some days just it isn't going to happen. We had something happen at home or in our personal life, and it might be difficult to do that, but you should be embodying that most of the time. Plus minus, you're kind of in that 50-50 territory, and minus would be, you're less than the bar, you're less than 50%. Our bar collectively on this is anybody that has 2 or more plus minuses, we need to have a conversation with and see what we can do to get them back on track. If they have a minus, they need to go on some kind of an action plan so we can address the behavior and make sure we get them back aligned. Again, don't expect you to adopt our core values. These should be things that you care about, that are important to you, your employees, your clients. For us, it's self-motivated, positive attitude, caring, client obsessed, authentic, and continuous learner. And again, when I'd shared our core focus, hopefully you heard some of those words ring true when I was reading through that. So goal planning. I don't think I probably have to ask this question with business owners in the group. You originally had some kind of a goal to start your business or buy the business that you're a part of. You've probably set goals for your organization. I think you probably know the importance of this, but beyond just the normal, writing goals are going to help you get better results. It also helps your teams around you align, gives them very clear priorities on what's important. Some of you might be a sole operation. Others on the call, you might have multiple departments within your team. And if it's not clear what the goals of the organization are, it just is really hard for everybody to be rowing in the same direction. It also improves resource allocation. If we know what's important, we can align resources and people to those important activities. They're not getting pulled in other directions because we've all aligned on what the important goals are for the organization. It creates accountability and transparency. I'm going to talk about KPIs and scorecard metrics in a little bit. And then it does support long-term sustainability of your business. You're apt to grow at a faster pace, and it likely has a positive impact, a higher positive impact on your valuation. So those are some of the other reasons why we dig into goal planning. What types of business goals do you want to have for your business? There's a multitude of different things that you could track and measure against. Again, I'm going to break down the short, intermediate, long-term focus in just a minute. But financial goals, you could have goals tied to revenue, your margins in the business. Maybe your profit margin isn't exactly where you want it to be. Maybe you don't know if you have a profit margin. I unfortunately talk to a lot of business owners that aren't very clear on if they're actually profitable or not. Do we need to get you some better financial data so we can see that in a more clear light? Cash flow, how do we improve cash flow? Could be different streams of revenue or operations that we're focused on. Operational efficiency, I'll give you an example. We have a tax and accounting business. We track our works in process. So when a client hires us to do something for them, accounting work, tax work, payroll, that project or that business goes into a workflow. We then track how long it takes once it's in that workflow to get finished, to come to completion. You may have an efficiency goal around, maybe our average work in process takes 30 days right now, and we want to get that down to 20 days. We need to create a plan around that. We need to track it. We wouldn't be a tax and accounting firm without referencing tax optimization goals. These are also important. The timing of when you receive revenue, how you structure your operations from a tax standpoint. There's different things there that you can goal plan around. Talent and leadership development. We made as an organization a really big commitment at the beginning of last year to build in time to train our leaders in our organization. We carved out time and brought in professionals to develop our leaders so that their skills can grow and their talent can grow. Customer and market expansion goals. You may want to enter a different market than maybe you were in before. You may want to hire a marketing team to help you build out, a new website and build in maybe some SEO structures so that you can reach different people that aren't seeing your business every day. And then risk management and compliance. We want to make sure we have good controls in place for the organization. You may have goals to tighten those up or create more efficiencies, and those are important things for your business as well. I think everybody's probably familiar with the SMART format for goal setting, but let's make sure that they're specific, measurable, achievable, realistic, and either timely or time bound is going to be important. So how do you take goals from vision to traction? Vision is going to be the longer term goals that you have for the organization. So when you sit back at your office or you sit back at night and you close your eyes and you think about the what ifs, what if my business could do this in the next 10 years? What if I could turn it into this? I could impact this. There's an acronym in the industry, BHAG, which is Big, Hairy, Audacious Goal. And you can see what some of those have been in the past and some still current for some bigger organizations in the US and across the world. Some are a little bit more aggressive, like Nike, calling out their competition, crush Adidas, and then others are just some aspirational things. For us, our 10-year target is to be the best and most integrated professional services firm with a small town feel based in Michigan. That's our big 10-year target. From there, you want to start to visualize what that could look like, and we break that down into what we call a 3-year picture. This is making it a little bit more real, but you're creating a picture of what could life look like in 3 years. We're starting to break this down into segments. So, maybe it's something specific you want to change with your client service, something you can improve. Maybe you're creating those standard operating procedures, SOPs for different parts of your business. Maybe it's a marketing plan that you didn't have before. But building a picture of what things could look like in 3 years. And then the traction component of this is where rubber meets the road. This is where we're building a plan on how we're actually going to start to bring this to light. So it starts with our 1-year plan. What specifically are the things that we're going to do over the next year to really start to bring this picture and this 10-year target to life? And then even more incrementally than that, what are the 90-day rocks? So these priorities we set for ourselves every 90 days that keep us on task, that will help us achieve those 1-year goals that we set through our plan. And I just put, how do you eat an elephant? One bite at a time. We've got to break this down into manageable things that we can tackle and are going to lead into, again, our 1-year plan and then our vision as we continue to move the business into the future. Key performance indicators, these are going to be different for every business, but what are the 5 to 7 measurables for your business that give you the best pulse on progress? Are things moving forward? Are we aligned with our 1-year plan? So for some of you, it might be, revenue growth rate. Maybe you want to grow the business by 10% this year. That's part of your plan. Breaking that down into something that you can track on a more consistent basis. We talked about margins before. Maybe it's cash conversion. You've just got a lot of work hanging out there that you've done the work. Maybe you've even billed for it, but it just hasn't been paid yet. You need to convert that business into cash. Tracking that on an ongoing basis. If you've got a budget, pretty important. If you want to be able to manage your cash flow correctly, are you tracking your budget to what you're actually spending on a weekly, monthly basis? I strongly encourage making these measurables that you can track weekly. It's going to give you a good pulse and allow you time to make adjustments along the way. So I think it's really important to make sure you're reviewing these frequently, and they're things that you can report out on and track on a really consistent basis. Which leads into tracking and measuring that progress. Again, you don't have to copy this verbatim, but this is a tried and true system for what can really work well for a meeting cadence. So if you have a leadership team, you should have weekly check-ins on the calendar. Our leadership team, we have an hour and a half blocked off every week. Some of you may jump in and say, Mike, you're crazy. I could never find an hour and a half in my week. Trust me, it's important. You have to make the time to do this. It allows our leadership team to come together, not only check in on those scorecard measures that I talked about, and if we're on track, off track, it also allows us to address issues that have been bubbling up within the organization before they become fire drills. Instead of emailing back and forth 15 times throughout the week, we have an issues list that we address every week. We add to that issues list as we're going through our normal, day-to-day and operational structure. And then when we get together, we address those issues, and the goal is to make them go away for the good of the organization. And we do that by assigning each other to-dos. We tackle the issue, we address it, and then usually there's some to-dos coming out of that somebody on the team is responsible for getting done prior to our next meeting. So that's what those weekly check-ins are for. If you have other departments within your team, they should also have weekly check-ins that are run in a similar fashion. And I can share more details about what those can look like if you're interested. Again, just for time today, we're not going to be able to go super deep on everything here. Quarterly offsites, also important. This is an opportunity that you've got as a team to carve out a little bit more space. So usually I recommend at least a half a day where you're meeting with your leadership team or your department is meeting. Offsite's really important. You're getting out of the office. It's too easy to get distracted by phone calls, emails. I call them drive-bys, people, stopping by the office and asking you questions or interrupting what you're doing. You got to get the team out of the office. Go rent a conference room somewhere. There's plenty of them around, and get your team together. It's an opportunity to look at the previous 90 days, what went well, talk about those rocks. Like I'd mentioned, did we achieve those? Were we able to move the ball forward? Talk about the next 90 days. What do we want to focus on for the next 90 days that's going to move the business forward? Check in on our values, our vision. It's a good opportunity just to realign as a team, reprioritize what's important, and then move into the next 90 days. And then at least once a year, recommend doing an annual offsite, at least one full day, up to two. Our business, we have a 2-day session. The first day is focused at more of a 10,000 foot level. So we're looking at the business. We're talking about our vision, that 10-year target, our 3-year picture. We've worked through a SWOT analysis, strengths, weaknesses, opportunities, threats. It's an opportunity to, again, step out of the business, focus on some of those bigger picture things that we want to make sure we keep a pulse on and address. And then the second day is, again, back to the ground level. We're getting tactical. We're looking at our 1-year plan. We're talking about our rocks. What are the specific things that we're going to do going forward to move the ball? Dashboards and scorecards are important once you've identified what those key performance indicators are. Those should be part of your weekly check-ins, your quarterlies, your annuals. Again, they give you the best pulse on your business and what's working well or potentially what's not working well. Most of us are in businesses where there's industry benchmarks available. So, use some of those KPIs if they make sense, and then compare them to what industry benchmarks show. It's important to see how you're stacking up to your competition and areas that you might need to make some adjustments in. And then document and adjust, regularly. You may decide that one thing is really important for you to measure today, and it could completely change in 6 months. We might be looking at our works in progress, like I talked about, and we get our works in progress from 45 days down to 30 days, and that adjustment worked, and we don't need to track it anymore. We made the adjustment, we fixed it, and we move on to something else. So it does make sense to review and make adjustments if need be. So bringing it all together, again, I think it's important to be thinking about those longer term goals. It's the big picture. It's the what if we could do this, and then breaking that down to see if we can make that happen. Set strategic and operational goals for your business. The strategic ones should be the things that are going to drive the business and the growth of the business forward. Operations could be, again, SOPs. It could be changing the way that your systems are structured or the way your processes are set up. Take the time to build out your KPIs and dashboards. These are really important. Have a regular review cadence and a place to review progress, and then adjust your plan and stay proactive. There are a few other things that I wanted to talk about that I think are also important. One of them, selfishly, we're a tax and accounting firm, and I do think that it's important to have a strategy in place in how you manage your tax and accounting needs. So have a partner that regularly reviews your financials. They're looking at your forecast and helping you make decisions, not only for what happened a year ago, but also what the next year, 3, 5, 10 years of the business might look like. I always ask the question when I'm talking to clients about taxes for the first time: have you ever been surprised, either positively or negatively, about something that you saw when you did your taxes or when you got your tax return back? And almost always I'm getting head nods that something happened at some point that was a surprise. We want to avoid surprises as much as we possibly can, and we do that through proactive planning. We want to have regular touch points throughout the year. We want to put projections in front of you so you can see, hey, if you don't change anything this year, here's how things are going to look. But we can make some adjustments now and actually impact your tax situation. Entity structure is one that I find a lot of businesses overlook. As the business continues to grow, evolves, changes, your revenue's grown to new levels, you've got more employees that are on your team, it could make a lot of sense to change your entity structure. Maybe you were a sole proprietorship before, and you should be moving to an S corporation or a C corporation, or maybe you should be moving from a C corp to an S corp. There's a lot of different changes that could potentially make sense, but having somebody look at that could be the result of you saving tens of thousands of dollars. We see it every week. We're meeting with businesses that they're not under the right structure. Accelerated depreciation is sort of a newer and hot topic right now. As part of the tax bill from last year, businesses have the ability to write off business expenses faster than they normally would have been able to. So now I want to buy a piece of equipment, or I want to put a new building in for my operations. Right now, at a federal level, with bonus depreciation, I might be able to write off that entire expense in this year. Michigan is making some changes to the way that they're looking at that. They've reduced the ability to write off that depreciation down to 40% this year, and I believe it goes lower next year. So there is some incentive to, if you're a business and you've got bigger expenses that could be coming up over the next 3, 5, 10 years, you might want to look at doing those now if you've got the cash flow and the ability to do it. Timing of income and expenses, I talked about that with tax strategy earlier. That can really be impactful. Maybe there's the opportunity with where you're at with your tax bracket this year. We really don't want to take on any more income because it's going to push you up to a higher level. Maybe we defer some of that to a future year if we've got the ability to do that. And then ultimately, if you're in the business where you could potentially be audited, and most of us are, being prepared to go through that if it were to happen. I'd also mention the role of wealth management. We have a wealth management firm here as well. It really gives you the opportunity to align both your personal and your business goals. So a lot of times we're looking at those things in isolation when really we should be bringing those two things together, especially for the owners in the group. Retirement planning for owners, there could be retirement plan options that you're not considering for the business that could give you the ability to save more. Personally, within your own individual accounts, there could be things that you could be looking at differently. Strategic use of excess cash flow. I can't tell you how many businesses we sit down with that have just grown to a point where they're raking in cash and they're sitting on 150, 200,000, 300,000 of cash that's earning them virtually nothing. We can keep that money in a business account, and you can invest it just like you could inside of a 401k. You could use CDs. You could use other fixed income investments if you don't want to take a lot of risk. Or if it's truly longer term money, you could incorporate, maybe even some stock into the portfolio if that made sense. So how do you think about that extra cash flow that maybe you have available? Succession and exit planning. What happens to the business when you decide you want to be done? Do you know what the business is worth today? Do you know what the drivers are that can make that business more valuable over time? How would you exit the business? Do you have people that would be willing to step in and take over? Would you have to go put your business out to market? Those are all things that having a partner, we can help you think through. And there's no time better than now to look at that, because you never know what could happen. And then that leads into estate planning and risk mitigation. If you're a sole business owner in your organization and you were to pass away, unfortunately, or become disabled, what happens to the business? Can the business run itself without you? If there's other business owners that are part of the team, is there a structure to buy out your portion of the business if you're not here? Versus, all of a sudden a spouse has to enter the business that maybe knows nothing about it. It's important to think through that as well. And those are things that, partnership with wealth management can help with those things. So I recommend having an advisory team. Selfishly, I'd love it to be ours. I know some of you on the call are clients, so thank you. I know some of you are not. Find somebody that can help tackle a lot of these things for you under one umbrella. I find too often that business owners are going 3, 4, 6 different places to get 6 different things done. They've got their tax guy over here, their accounting guy somewhere else, their wealth advisor at a different location, and nobody's talking to each other, which ultimately leaves you being the one that has to facilitate all of that advice and figure out how one thing impacts the other. You want to have an advisory team that works together and a point person that can help direct a lot of that advice and figure out, if we do something over here, it's going to impact this thing on the other side. So really important to pay attention to. Objective financial insights, they can strip out a lot of the noise and make sure you know what's important. With things like the tax bill that came out last year, or we have tariffs that were introduced earlier last year as well, and all these changes. How does that impact my business? How do I strip out the noise? How do I look at this objectively? And then they can also be a good accountability partner to you for your long-term goals. These goals that you set for yourself, helping you think through how you're going to plan around them, and then ultimately hold you accountable to the things that you said you want to do. And then support through the bigger transitions as you grow. If you have downturns in the business, our wealth management business, we see a correction in the market of 10% or greater, at least 2 to 3 times a decade. And sometimes it's as severe as we could see a 30 to 45% downturn. We need to make sure we can still pay our employees. We can still run the business. We've got contingency plans built in to accommodate that. Some of that's having a healthy emergency fund, making sure that you've got good profit margin built into the business. Those are all things that are really important. So I'm going to hold up there. I know kind of a fire hose of information, but I hope at least a few things that you found helpful. I know for some, probably some refresher on a few things, but when you package all this together and you do it under an operational structure, again, like EOS, the Entrepreneurial Operating System, it can be a game changer for your business. And I'm not endorsing EOS. I don't get paid by EOS. I've just found it to be a really good structure for us to run our business on. So something I would consider. But Kyle, I'll turn it over to you. See if we have any questions in our Q&A bank. And then if not, we can talk about some next steps here.
Thank you, Mike. Thank you for your time and your expertise and your insight today. We don't have any questions right now. Might be my fault. I forgot to mention that in the bottom right corner, you can write in the chat if you have any questions. So I'll give it a minute to see if anybody wants to write any questions. But if you have any questions that you don't want to put in front of the group today, feel free to reach out to Luke Meadows, who's our business development specialist. and the QR code shown on the screen right now. We'll also send out an email with more information, and Luke can help you. And we can get those questions answered for you. But I'll give it a minute here to see if we get any questions.
We'll get a copy of the slides out to the group. Again, I know a lot of this is high level today. We can go a lot deeper. I can go a lot deeper with you on what some of these specific things could mean for your business. We can sit down, help you come up with a plan, if that makes sense. But when we send this out, if you want to set up some time, the QR code is a way to get Luke's contact information, or you'll have a link available here where you can book time, and he'll gather some information from you on the front end, and then just make sure we get you in front of the right business professionals to answer your questions and help you with a plan. Any questions?
We don't have any questions.
All right.
We don't got any questions right now, so we'll jump ahead.
Yeah, quiet group today. That's okay. Kyle, you want to talk about our next webinar?
Yes. So next up, we have another webinar on Wednesday, March 18th at noon as well. It's going to be virtual, so same process as today. It's going to be our Business Essentials webinar. This session will offer particular overview and important tax and financial fundamentals, covering entity selection, key deductions, accounting methods, and retirement considerations, and more. If you want to RSVP before, the best email is our events at hnscompanies.com or heatherj@hnscompanies.com. If you have any questions, feel free to reach out to those emails too about the webinar, and we can give you more information.
Perfect. Well, I just want to thank everybody on the call for attending today. I tried to keep it somewhat brief. I know I start to lose people's attention after about 35, 40 minutes. So hopefully this fits in well, and wanted to make sure we had time for questions too. Again, I know questions can be a little bit more individual based. So please reach out. If you've got a business partner or professional you already work with here, reach out to them. We'd love to hear feedback from you as well. We'll be sending out a post-webinar survey so we can get some feedback from you. And if you have anything specifically that that you'd like to see us present on in the future, we'd love the opportunity to get feedback on that as well. So with that, hope everybody has a great rest of the week, and we'll hopefully hear and talk to you all soon. Thank you.
Thank you, everyone.